welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest news from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. Remember, our focus on the day will also be on specific new age technology stocks that are buzzing in trade and where are opportunities really emerging for you as equity investors in case this is the space that you're watching out for. We'll discuss all of this with an expert today, but first up, a quick check on how the benchmark indices are doing at this point in time. Remember, yesterday, after 2 days of losses, the markets did turn positive. That's despite the global cues and the weakening trend that we've been looking at. And the markets are looking to extend that gain in today's trading action because halfway through the mark, and we are actually able to see that the Nifty and the Sensex are still holding up. Nifty is at 19,424. About 30 points up in trade, although it's come tad bit lower from the gains that we had seen in the first half of trading action. The Sensex is also up about 91 odd points at 65,305. Now, when we talk about the broader markets, they're doing better than the benchmark indices per se. So you're seeing the mid and the small cap 100 indices doing better. You're also seeing many of the other sectoral indices. So you can see the mid cap 100 index is up by 0.8%. The small cap is up by 0.7%. So it's the broader markets that are actually hogging more limelight. Looking at the other sectoral trends as well, you will be able to spot a lot of sectors that are up in the green and buzzing in trade. You have the autos that are 0.5% up, FMCG that's 0.7% up in trade, metals that are 0.6% higher. As well, you have the realty space in the similar trend as well, about 0.6% up in trade. The consumer durables about 0.4% up in trade too. The Nifty Bank, although it's holding on to that 44,000 mark, it's up by just 0.1%, but its constituents, the private banks and the financial services are supporting, with financial services really outperforming the other constituents. It's the PSU banks that's now slipped into the red, about 0.3% lower in trade as we speak. But largely, the trend is on the positive side. So which are the stocks that are moving the Nifty right now? You're seeing stocks like ITC. That's one of the key contributors on the index. It's up by over 1% odd and among the top gainers. Adani Enterprises and strong move in the last 4-5 trading sessions. And you're seeing 1.5% uptick, 2.5% uptick right now for Adani Enterprises. HDFC Life is the top gainer, 3% higher for this one. NTPC and SBI Life also gaining strength as we speak. On the downside though, Jio Financial Services, second day of making debut and it's locked in the 5% lower circuit again today. Cipla, TCS, BPCL and Grasim, these are the other laggards as we speak. And Reliance Industries also is trading tad subdued because of the overall subdued move on the Jio Financial Services space too. But let's welcome our guest on the show. Mr. Kranti Patini joins in. He's the Director Research at Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, your take on the markets overall. How are they looking to you? Especially, we are looking at several global events lined up for this week. There is the US Jackson Hole Symposium and the RBI minutes of the meeting are also slated to come on Friday as well. What is your own sense of where are the markets headed amid all of these global events?
Yes, actually, despite of all the global events that lined up, Indian market showing its positive signs and market find its strong support in the range of Nifty 19,320. This is the level market could able to show its strength, and we what we are witnessing is the selling has came down. The FIS selling has not that much bigger. Earlier, it used to happen on the higher levels of the market. What we can see is the overall buying interest is emerging. The DIs have been the net buyers during this phase, and also the retail interest is coming back, and investors have been cherry picking up the stocks in the recent last couple of weeks. What we can see is, of course, we have always something to worry from the global markets that hits the market always here and there. But what is proven is Indian market is definitely it's a buy on dips market, Sakshi. So investors should not feel any nervous. The markets are coming down in India. Of course, some kind of knee-jerk reactions will be there in the market, but people who have faith and invested in the lower levels, definitely they are making nice gains in these kind of markets. So don't miss the dips. That's what I can advocate to the investors. So utilize the dips always, and if there is a run up in the near to short term, always better to take some profits from the table. That is the strategy investors need to have in the medium to short term, uh, and uh, and stay invested the longer term positions, which are investing positions they can keep in their portfolio. Of course, the main thing for Indian markets is the it's showing its resilience despite of the global worries, despite of global liquidity tightening and rising bond yields across the globe. Indian equities are completely uh, uh, favored, and there is a lot of buzz with respect to Indian equities are concerned across the globe.
Okay. Mr. Patini, let's shift focus to some specific stocks that are buzzing, and a segment that's in action today is also the new age technology stocks. Now, we've been seeing that most of these new age tech stocks have been performing better, not just on the stock or the shares level, but also on the earnings front as well. We did see in Q1 many companies report either profit, operating profits, or at least the commentary which is clearly focused on profitability as well. In fact, we've actually seen that for most of these new age tech stocks, the April to June quarter was perhaps the best quarter in terms of returns that they have given from the time they got listed. Many of them had their first quarterly profit on the returns basis as well. And of course, we've seen many of these companies perform very well on the earnings front. For example, today we are seeing a lot of movement come in on car trade technologies. The stock is up about 5% odd in trade, and apart from this, Paytm is buzzing in trade too. We have PB Fintech that's also buzzing. Zomato is up by 3% in trade. Delivery and Mapma India, that is CE Info Systems, all of these stocks are up in trade. So let's take one by one most of these stocks. Let's talk about car trade technologies first. The earnings for Q1, we actually saw profitability come in at 4% higher at almost 13 crores. The revenue was up by 5% for car trade technologies. So that's as far as the key numbers are concerned. Today, we've also seen Nomura, the broking house company, that's come out with a report suggesting a buy rating on the company with a target price of 678 rupees. What they've also pointed out is that they are positive on car trade after the company has acquired the businesses of OLX India, and they now see a potential for value creation over the medium term. So let's talk about this stock, 505 for car trade technologies today. How do you see the fundamentals of the company, the earnings, and now what are the prospects for all the investors out there?
Yes, actually, all these newest technology companies, they learned in a very hard way to make profits. As what they can sense is this is applicable to all these new age companies. They have been more focused on the market share and enhancing the revenue, and forgetting the basic premise of business, that is, they're not least bothered about the profits. And the main focus was to expand the market share and increase the prospects of their business. So, as the global liquidity is tightening and the venture capitalists and the investors, they're very getting cautious with respect to the profitabilities of these ventures. So, the right now the main focus for most of all these companies have been turned towards profitability and increasing the margins. That's what right now we can see. This is the reason most of these new age companies, they focused on the profitability, and that's the reason their operating profits and the profits have been gone up in the recent past one quarter. So and in line to their profitability, the stocks have nearly corrected from their peaks. Most of these stocks have corrected more than 50% from their listing prices, and from there onwards, the stocks have risen from they formed their bottoms, and they have risen on an average 50% again. So the right now, if you see, the trend can be continued because they learned in a hard way to make profits, and as they increase the profit, profitability, the revenues, uh, the revenue focus. So what we can sense is going ahead, there can be a upgradation of the target prices, and also uh, the main focus, the institutional focus, can come back again with these sectors, with these companies.
Okay. Let's now talk about Paytm, sir. And Paytm has also news flow, which is helping its stock react in today's trade. The company is planning to build an AI software stack and has given positive projection as well on as to how the AI system will help in various financial institutions in capturing the possible risks and the frauds, while also protecting them from the new kinds of risks due to the advancements of artificial intelligence. The firm has also seen its merchant subscription reach 8 million through various payment facilitating devices such as POS devices and sound boxes as well. So positive data coming in from Paytm. As far as the earnings of Paytm were concerned, in Q1, we did see the loss really narrow down quite substantially, or almost halving from the last year same quarter. The revenue jumped almost 40% on a year-on-year basis. For Paytm, which is also one of the buzzing stocks today, about 2.5% up. What is your thought process? And at the current levels, 857, where would you see the stock going forward from here?
Uh, Two ways, Sakshi, given the stability in the stock price and also the improvement in the earnings perspective. Uh, Put together, the stock is in an interesting juncture at this point of time. Investors who have a longer term horizon, at least minimum 1 year time frame, investors can buy the stock at dips for a 1 year horizon. But the main focus is right now is the profitability. The company has been doing all its efforts to make the company profitable, and also the new segments, the lending business and all, they have been showing the good prospects in the last quarter. So this is prompting Paytm a conviction buy at this point of time in this price range for the investors who are looking for a horizon of around 12 months. But Sakshi, these stocks at this price point, okay, they were very interesting when the stocks at 500 levels, and these stocks have rallied more than 50% in the last 2 quarters. Uh, so tips can be used for these stocks to make a entry levels for these companies.
Right, you're absolutely right when you say that these stocks have run up almost 50% in the last 2 quarters. Because if we see the year-to-date performance also for most of them, we'll see that Paytm has outperformed with a 62% surge on a YTD basis. We also look at Policy Bazaar, that's PB Fintech, on a year-to-date basis. That stock is also up about 60 odd percent. Then we have CE Info Systems, that's Map My India, that's also up by 60% in the year-to-date basis. Zomato is up by 55%. You also have Delivery, that's up by 25% on a YTD basis, and Car Trade Tech, that's up about just 7%. Only this one, although Nykaa is down in trade on a year-to-date basis. So let's not forget that not all of them, but some of them have also declined in trade. Although Nykaa shares are buzzing in trade today, they are in the positive zone, but on a Y-to-date basis, they have declined right here. Mr. Patini, for any investor looking at the new age tech basket, what would you really recommend? How should one really approach? Is this the right time, first of all, to jump into some of them, start building up their positions, nibbling into some of them, because now we are seeing profitability come in and fundamentals improving for some of them? Is this the right time?
Absolutely, Sakshi. I believe this is the right time for the new age companies. Investors want to take their positions because, as you rightly mentioned, one thing is fundamentals are improving, profitability is coming back, and also valuations are not stretched as it were they were at the time of listing. So it is a very good price range for any investor who want to take their position, but they can take. In a staggered manner. There is no hurry to buy and jump at this point of time. Probably they can buy at dips in their portfolio. But absolutely, it's the right time to start taking the position in these new age companies.
Okay, so if I were to ask you, Mr. Patini, that out of all of these names that we've discussed, Paytm, Policy Bazaar, Zomato, Car Trade Technologies, and also Delivery and CE Info Systems, maybe Nika also. If I have to discuss with you, which are the best placed stocks to really keep their focus on? Investors, where should they keep their focus on now?
The first priority goes to Sakshi, definitely to 197. The Paytm is the favorite pick at this point of time. The remaining also at an appropriate point of time, one need to take the decision as per the price movements and the earning visibility improves for these stocks.
Okay, and some of them, like we already have seen a 50% surge coming in. Where do you see fair value still, on the stock coming in? And where do you believe that, the stocks are now poised to perhaps reach their issue prices once again?
That's a very interesting question, Sakshi. Okay, one thing is the stock have uh, completely taken a U-turn and they formed a base, and it's a process, and they're right now inching towards in a higher trend. One good thing that happened in these stocks is they are in a the trend for the most of these companies are in an uptrend. The trend has emerged in a positive territory. So always investors need to keep their trend as their friend. Okay, if the trend is helping
Sure.
the stock to rise, okay, one can start participating in this trend. uh, because earlier they were in a downtrend. When we go against to the trend, they have witnessed a significant losses. So when when the trend for all these majority of these companies are turning positive, if the investor is a trend follower, this is the right time to follow the trend.
Okay, Mr. Patini, also just like you pointed out that Paytm is perhaps the best placed stock that one should look at in case one is interested in buying positions in some of these new age tech stocks or building their portfolio stocks here. Which are the other stocks in pecking order? Where would you be positive on after Paytm?
Yeah, we can PB fintech also very interesting, strong model with respect to the insurance sales that are taking place through online, and the car trade also comes into a picture, but it is more about the longer term perspectives for the how the business is going to emerge with the recent acquisition of OLX also. OLX car sales is concerned, and Nika also, we can't ignore the business model. It's a very interesting business model. But where I have my reservations is making uh, the company has to turn profitable, increase their margins, and also the valuations is a little bit stretched at this point of time. So the company has to improve their earnings in a very strong way. So that's where the overhang with respect to Nika is concerned. No doubt, as the disposable incomes of Indians going up, and uh, the, the business model is quite strong. But whereas where the company is missing is the profitability. So we cannot ignore the stock. One can keep on watch list at a right time when the things are as we get the more visibility. One can take the positions.
Okay, and is there any stock that you would still want to stay away from or advise investors to really watch out before they invest currently? And where you still believe that the company really needs to prove themselves before the investors really take a pick there?
There is a lot of consensus view, consensus buy with respect to Zomato is concerned. And there was a hue and cry, there was a buzz when the company just made 1 crore rupees profit. People thought it's become profitable as if they made billions of dollars of profit. With respect to Zomato, I'll just wait and watch for some more time to get more clarity with respect to how these earnings are going to improve over a period of time. So I'll just and the stock has rallied more than from its low. It's rallied more than 80%. So Zomato, I just wait for some more time at this point of time, Sakshi. But it's a very interesting model, strong business model. But
Sure.
the things that are happening, I try to stay away from Zomato at this point of time, because completely it's a consensus buy right now. Whenever there is a consensus buy, the ultimate return that comes to the investors will be narrowed down.
Okay, fair enough. Well, many thanks, Mr. Batini, for being with us on the show and discussing your insights with respect to the new age tech stocks and how does one really go about building their positions around this space, which is buzzing in trade as of now. Always a pleasure having you with us on Business Today TV. So many thanks for being with us. Let's look at the Sensex. It's up about 100 odd points at 65,317. The Nifty also holding up onto gains about 0.2% higher in trade at 19,430. So do stay tuned with us on Business Today TV to catch all the updates from the world of business and stock markets. And to track this momentum, you must not forget to subscribe to our channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.